In this video, I'm going to show you how to make a couple $100 a day trading cryptocurrencies. And to get started, there are only 3 things that you need: a phone or laptop with an internet connection, an account over on a trading platform. In this video, we're going to be using Bybit. I'll leave a link down below. And number 3 is a brain. If you got all 3 of those, you're good to go. And now before I start talking about how exactly we're going to trade and exactly how all these things work, I want to quickly give you guys some insights into some useful websites. So first of all, if you want to get a full-on overview of all these different coins that exist, I'd recommend you guys to check out CoinMarketCap. It's just an overview of all these different coins, how big they are and what the current prices are. If there's any one specific coin you want to chart, I'd highly suggest TradingView. This is basically a website where you've got an overview of almost any coin that you can actually chart on fully, and it can sometimes be very useful. I've got links for both of these down below. And last but not least, we've got ourselves Glassnode. This is just a platform where you can find a ton of different dashboards with different information pieces that might help you make some proper decisions. All 3 of these are completely free, and I'll leave links for them down below. To get started, I should explain there are a lot of different ways to trade, and there are a lot of different ways to make money in the crypto space. You can invest it over the longer term, which was what I mostly show on this channel. We look at different coins that have a very high potential for success over longer periods of time, and we look for the best moment to buy them. And if we do that consecutively over longer periods of time, you won't make a lump sum if you're trading every day. You know, you make those crazy lump sums, you make those crazy $1,000 to $1 million trades, or basically returns on investment, if you invest over longer periods of time. But the thing is, we only do that for proper assets, things you believe in and you'd be comfortable holding for the next 3 to 5 years. What we're going to be showing in this video more of is actually short term. So we're buying something with the idea to get out in the next day, couple days, couple weeks, but I'll go over my strategy a lot more in this video about how exactly we're going to get this profit. And I promise you that at the end of this video, you'll understand exactly what we plotted in here and exactly what this means right here. So stay tuned and make sure you press that like button. Step number 1, make sure you sign up to the exchange. Personally, for this video, I'm using Bybit, but I'll leave a couple exchanges down below that you can check out. But just go to the link down below, sign up, and then fill in your KYC. Because it's a properly regulated crypto exchange, they want to know who you are. And once you've done that, head over to the top right where it says deposit. But I'll actually leave a special link down below that will get you some free trade. I'm not so sure exactly how much money it is yet, but just press the link down below and you'll see it. It's going to be a free trading position as well that you get, plus some crazy deposit bonuses, which are simply put just free money. So just check it out. Anyway, once we've done that, it's very crucial to understand that there are 2 major different ways to trade with derivatives or to trade on spot. And the main difference is spot is just you buy something, you sell something, and derivatives are you buy something with a contract where you can actually buy with $1 but have a $10 contract because you're using leverage, meaning if the price goes up 1%, you are also gaining 10%, and if the price comes down 1%, you are losing 10%. It's just a leverage effect, but that's the main difference between these 2 sections right there. And for the purpose of this video, we're going to mostly be going for these perpetuals, which just mean that they will never expire. You can just keep them open forever if you want. These contracts never expire, that is. And we're going to be looking for a juicy Bitcoin trade, but we'll explain that later. There's a couple key terms I want to explain to you all first. The first thing I want to say is price action. When we're speaking of price action, all we're talking about is the price moving somewhere. Again, you can always see that in the chart the price is doing something. And even though right here within this little triangle, we can see it's converging and it's actually moving less and less and less, we could consider this sideways trading, as well, neither the buyers nor the sellers are really winning. But then right here at the end, you can see a breakout is starting to form. And a breakout just basically means we've had a certain pattern. We've had a certain price action for a while, certain type, in this case here, sideways. And all of a sudden we see a crazy movement. You can see here, we've got a breakout towards the upside. The other 2 terms I'd like to make you guys familiar with is a downtrend and an uptrend. So I'd say it's pretty simple, but bear with me. An uptrend is basically continued higher prices. Let's say we start at this level right here and the price continues to go up. All right, we've got a new high point. I've numbered that number 1. Now the price comes back down, but instead of going down all the way, it actually stops and makes a higher low. So the low that we started at, this is our low point. Now, our I guess, second point here, as long as it does not cross this previous low, and after hitting this new point, continues to make a new higher point, a higher high is what we call that. Again, this is the initial high, so to call it. So an IH, we just call it. Here at the start, this was the initial low. This was the higher low, we can call it, and this right here is the higher high. From this point on forward, we've got ourselves an uptrend. Vice versa, I think it makes a whole lot of sense. Again, if we're starting at a point, in this case here, this higher point, we come down and then come back up, but we do not actually break this previous high point. We've got ourselves now a lower high point, right? But then afterwards, we also make another low, which is even lower than our previous low point. This is basically, this action is what you consider a downward trend, a downtrend. And the key thing to understand is that we want to trade with the trend. The trend is our friend, is what they often say. So what we're looking for in this scenario and how we usually place our trade. I'm oversimplifying it right now, but that's to keep your guys' attention to how exactly this works, is we identify these important zones where the price moves a lot or where price faces some support or resistance. Support or resistance can easily be explained as an area where the price basically bottoms out at or faces a hard time at. If we're looking at this, for example, well, it's pretty easy to notice. There's a peak that does not get broken for a little while. We consider that a resistance, or vice versa. You understand that right here, during this period, the price seems to not go below this level, but even on a little bit of a higher front, mostly it trades above this little line right there. We call that the support because the price keeps bouncing from there. Now, because sometimes just drawing one line is a little bit too vague, we can also draw these zones, so to speak, of heavy price action, where again, the price just seems to move a lot. And here's how it started. Basically, we identify, hey, within this time period here, all the way back there, the price was moving a lot and it was facing a lot of hardship within this area. So we just draw that line out a little bit further for future reference, but this is what it looked like at the start. We just drew it out a little bit more for future reference. Sometimes you need it, sometimes you don't. We then noticed, hey, the price came down. A lot of price action was happening within this area. And as you can see, we didn't draw it out because we apparently never really needed it to. So as we're at this point right here, what we're waiting for here is to identify whether or not the trend is going to continue or reverse. The reason I'm saying that is because if we look at the history here, there's basically a downtrend that was going on for a good while. But some other major factors, some macroeconomical factors were showing us that this might be where things turn back around. And without explaining it too much, there's basically some longer lasting lines that Bitcoin has followed for half a decade or so by now, where Bitcoin's price just basically jumps off from. And so we're expecting the bull market to come back, or basically a major bounce to come. But we're not that interested in trading that bounce. That's extremely difficult and you'll be wrong many times. We are not trying to find the moment where the trend switches around. We're trying to look at what is the current trend and can we make a trade that follows this trend? If not, then we wait for the trend to showcase itself perfectly before we open a trade. I'll explain. In this case here, we're not looking to open a trade right there. Why not? Because we don't know it's going to be turning back around. That's where we're going to play with a lot of these supports and resistances to basically increase our success rate. To elaborate, as you can see, the price moved up, faced some resistance, but broke through. All right, we're watching right now. It made a new high, came back down, and apparently, all right, is basically struggling at the similar levels we previously had as a resistance, which now it finds support at. So we've got our new high, we've got a new low. Now we're really interested, and as we see, the price moved up, faced some resistance, but broke through, made a new high. Now at this point, we've got a new trend, we've got an uptrend. So what we're looking for as of this point is for a new pullback, hopefully in a similar pattern as we saw right here within this area right there. What do I mean with that? Well, after making that new high, the price came down to make a new low, as we know, then faced that resistance and broke through. But the crucial point is that it actually had a bounce off of some previous support. We're basically going to be looking for a similar sort of pattern here as well, okay? So we've got our impulse towards the upside. We broke out, we've got a new high point. Now we are expecting a pullback to happen. Where do we expect this pullback to happen to? To some previous major resistances. For example, the previous high point. And hindsight is 2020, but here it showcases indeed we come back to this previous high point, and that exactly right there is the moment that we'd open a trade, which in this case here would have been the last possible trade, funny enough, well, at least for the time being, but that's basically how it would work in theory. A more practical example that we actually did live before is this one right here, where the same applies, just exactly the opposite basically. And the only difference is that even though both of these charts are the 4-hour, this is a way shorter time period. The other one is a more long-term trade. Anyway, we've identified the trend after a little while. We can see prices keep continuing to go down lower and lower. In this chart, there are many of these little zones because we're paying very close attention. You don't have to put in so many, but it just sometimes can make things easier. In this case, what we have done is actually establish, okay, we've got ourselves an impulse, all right? Oh, we've got ourselves a high point juicy, but all of a sudden prices came back down and made a lower low. It made afterwards a lower high again. So we draw these two white lines in. Why do we do that? Well, it's to just give ourselves an indication of how the price is looking right now. And we extrapolated that by drawing these lines out. That's, as of this point, our trend. And now from that perspective, like we also saw in, I believe, this example right here, as a baseline, we expect this pattern to continue. So if we're drawing this is called a symmetrical triangle, we expect the pattern to basically look like this until something crazy happens, like a breakout, like we're seeing right here. Here also, we expect as a baseline the price to just look like this forever and ever until, like we're seeing right here, a breakout of sorts happens. This, however, this breakout that you're seeing is not the trade we're looking for though, as it's way more difficult. What we're looking for is basically a continuation of the pattern that already we had seen for a good while. So again, after Bitcoin's price made yet another lower high point, and we noticed it was turning around and got ourselves some confirmation. Confirmation, by the way, just to give a good indication, means that it turns around and gets you a second closing candle. So this initial candle right here, the red one, is a reversal candle in this case. Not the most textbook one, but hey, it does the job. And then afterwards, that second red candle just shows it's confirmed. The moment that happens, we open our short because right now we expect this to be the quote unquote top. It's nearly perfect. It's actually almost a textbook type of reversal on the short term, not a trend reversal. And I like to always go for a risk reward ratio of 3. Our stop loss we've placed slightly above because we need to have some leeway for the price to move upwards in the short term before actually breaking down. And how that would work on Bybit is you go to derivatives, USDT perpetual, or in theory you could do this on spot as well if that's what your preference is. And over on Bybit, they've made it extremely simple to trade. Everything happens here over on the right. You've got limit and market orders. Limit basically means, hey, we choose the limit price. Market just means let's buy or sell it right now. For the example, let's just use market, meaning we want to trade right now. Then we put in the amount of dollars we want to trade. Let's just do 10,000 because we've got some leverage. Again, in this case here, we've got isolated 10, but it could also be crossed. Just read for yourself exactly what the difference is. Now, because we're using 10x or so leverage, you could also use 50. It just depends on what your preference is, or even 100 for that matter, and you can see the difference. We want to open a $10,000 trade, but because we're using 100x leverage, we only need $110 to do so. Anyway, the buttons we need to press, if right now this chart right here on Bybit or on another chart, whatever, it was showing us that we need to buy or sell right now. Or for example, looking at this breakout and we're thinking, man, I want to actually, because my theory is telling me so, open a trade right now to basically catch this wave to continue on. We'd go over to Bybit, put in the amount of dollars we'd like to put on that, press this little button for take profit and stop loss. In our trading example here, we used a profit of 7.7% and a stop loss at 2.5%. So it basically insert both of those, where again, it takes profit at 7.5% profit and it actually stops our loss at minus 2.5%. You're actually able to do these numbers, times a certain amount as well, though. For example, in this case here, we're trading 100x, so you might actually want to go for, a lot more profit than 7.5% or a lot more of a loss than 2.5%. Just depends a little bit, but you can figure that all out for yourself. Another couple things you might want to know is if you've got money on your account over on Bybit, but it's not showing up in here, you might have to press transfer and take it out from your spot to your derivatives account. And there are a couple of other cool tools they've got to make your life a whole lot easier if that's something you're interested in. Plus, there's a little tutorial button at the top right, I believe. Yeah, here we go, if you need it to be a little bit more in depth. But anyway, there's actually another couple of cool things that Bybit's got that a lot of people don't know about. So give me a minute to explain this to you, as it might be some tool you just fall completely in love with if you understand how it works. So over on Bybit, they've apparently now got a Trade GPT, your personal AI investment assistant. Need suggestions about hot coins, market trends, trading strategies, and whatever? I'm here to help. So apparently you can ask this bot questions about trading, like for example this: analyze Ethereum today, then suggest at least 3 trading strategies suitable, explain why and strategies, characteristics, yada yada yada. So as I press that button, it basically comes here and explains to me, hey, we've got a strategy. For example, we want to trade the bullish breakout, direction bullish, meaning upwards. This is where you want to enter. Specifically, it's a bull resistance price. Our exit is, dependent on our risk reward. And the stop loss is below the bull support price at around 1588. explanation for it. It's just pretty amazing if you're new to trading and you'd like to see some quote unquote tips. Of course, do your own due diligence and be very careful as it is a bot. But as you can kind of see from the bottom here, you can even just press trade now or copy now, making this a very extremely kind of scary, easy way to trade. And the reason I'm showing you this is because even though they've had this feature for a while, I believe they just did a massive upgrade on it. And just to give you guys some indication, if you asked it this before, it really wouldn't know what to do. Let me change it to an apostrophe here. What happened to Bitcoin last night? Give me some data insights and then suggest at least 3 trading strategies suitable and explain why, something like that. And now it's able to actually do that, explain the price, which again, there was not really too much going on, but it's about the idea. Give us a couple different strategies to trade on. This is just, in my opinion, extremely cool. You can do this for a lot of other altcoins as well, a lot of cool stuff. And then there's another interesting feature over on Bybit that a lot of people don't know about. It's called the Bybit Unified Trading Account, short UTA. And as you can read, it's a versatile all-in-one account mode that offers access to multi-currency trading and core trading products. Well, simply put, what it does, just it bundles your account together. And it then goes on to explain all the different benefits. But the long story short is that it provides traders with a powerful option to combine trading and cross-collateral margin without switching between accounts. And so if you're a trader, this can come in handy quite a lot, especially if you're experienced. Like you can see, unrealized profits can also be used as a margin to open new positions. So if you're making money in one trade, you can actually use that again to open more trades. So if you're low on money, but you've got some juicy opportunities, for example, you're more easily able to utilize them. And when looking around, I was also even able to find a comparison between this feature, this mode, and the similar sort of mode they've got over on Binance. On Bybit, it's a significant amount better. There's a good reason I mostly use Bybit to trade, guys, because I love them a lot. Amazing fees, amazing people. I was with them in Singapore over the last couple of weeks. They're amazing. And they treat you right, especially if you're, I mean, it's funny for me to say, right? But especially if you're trading a lot. Even in Singapore, we went to their office, met with their CEO, had some cool parties, had some cool dinners, galas, whatever. Even at those events, there are some top traders. And it's just very interesting to see that they really appreciate the people in person, fly them over, give them everything because they're doing a lot for the platform and they're good performers. And that's why in the comments section I sometimes ask people, hey, if you're a really good trader, connect with me, send me a message, because there are so many opportunities out there that you might have never known about because you don't have the right connections. But yeah, that's a story for a different day. I just recommend you guys to look into it, into this unified trading account feature. Again, the more advanced you get, you do realize there are good and bad sides to it. It just depends on how you like to separate your assets. Some people prefer to have everything in one area to be able to do everything. Some others like to have more separation between their funds for either safekeeping or any other one reason. It just depends on you. But yeah, there's a lot to it. And so I recommend, if you're interested in it, to just kind of watch this video here, which is just 3 minutes, or to read a little bit more over on their blog, or you get a pop-up every couple of minutes that you also might want to check out. But having said that, I'll leave a link down below to Bybit and to a free trade so you guys can check it out for yourselves. And of course, always do your own due diligence, research whatever I explained in this video thoroughly, as this is hopefully one of the ways people can escape the realm that they're currently in, because it's a pretty amazing opportunity, but it is quite difficult and it takes a lot of time to master. But hopefully I've helped you one step further along your journey. And if you did enjoy it or learn something new, make sure you press that like button, and I'll see you guys again on Bybit or on another video.